You're welcome to another edition of the Economy and Politics Show, where we bring you key socioeconomic developments as it affects the households. This edition will discuss fourth quarter 2022 policy options for Nigeria's fiscal and monetary authorities. And my guest is Dr. Muda Yusuf, CEO of the Center for Promotion of Private Enterprise.
Thank you very much, Otto.
Before we go on to the conversation, let us give you a wrap of key stories from last week. During the just concluded summit held on the margins of the 77th United Nations General Assembly meeting in New York, President Muhammadu Buhari stated that the Nigerian economy is ripe for increased investment, hinting that private capital inflow into the economy has reduced. The president bemoaned the decline of capital importation, especially foreign direct investment, which is the more patient form of capital needed growth. Analysts believe that the government must address the problem of exchange rate differentials and policy inconsistency to incentivize investors. Also last week, in a new report titled Risk of Global Recession in 2023 Rises Amid Simultaneous Rate Hikes, the World Bank said the currently expected trajectory of interest rate increases and other policy actions might tip the global economy into a recession with greater implications for developing economies. Those are some of the key stories from last week. If you're joining us, it's the Economy and Politics Show, and our focus today is on fourth quarter 2022 policy options for Nigeria's fiscal and monetary authorities. And my guest is Dr. Muda Yusuf, the Chief Executive Officer of the Center for the Promotion of Private Enterprise. So, Dr. Muda, let's look at the second quarter of 2022. The gross domestic product growth figure that came out from the National Bureau of Statistics showed the nation grew at 3.54% against estimates. What is instructive for our fiscal and monetary policy authorities based on what came out from the growth in terms of sectors that even drove the growth in the country?
Yeah, thank you. The sectors that drove the growth were actually the non-oil sector. Even though we still have some sectors that contracted, some of the sectors are still in recession. And of course, some of the sectors actually grew, particularly those in the service sector. You know, for instance, that the highest growth rate that was recorded was in road transportation, you know, which perhaps speaks to the fact that there's a lot of movement in terms of businesses around the country, even in spite of the problem of insecurity in the country. And of course, other service sectors like the ICT sector also did very well. The real sector of the economy grew. I mean, they recorded positive growth, but not too high. For instance, agriculture recorded 1.2% GDP growth. Manufacturing recorded about 3% GDP growth. So it shows that those sectors are still struggling. But on the whole, I mean, 3.54% GDP growth is good, given the general domestic and global economic conditions. Then, of course, the sectors that contracted the most, I think, was the refining sector, which contracted significantly by about 42%, which is quite significant. And of course, the story is very clear to everybody. The refineries have not been working for quite a while. Rather than be funding the government have been funding them. So it's one of the biggest burdens that the government is carrying. They've been declaring losses running into hundreds of billions of naira annually. And of course, the railway system also recorded a major contraction. Again, that is not surprising because of the issues of the attack and the suspension of rail activities and all of that. So the textile industry, the refining have remained in recession. The textile sector, you know, for many years have been grappling with problem of high energy costs, problem of importation of second-hand clothing and all of that. So the sector has been under a whole lot of issues. And in terms of competitiveness, many of the textile companies have since closed down. Many of them are under receivership in spite of all the intervention funds and all of that. So that is the general picture. The economy still appears to be resilient in spite of all the headwinds that we experienced in the second quarter.
Yeah, the economy still shows resilience, but of course there needs to be that good mix of policies, both short-term and long-term, that can really unlock more growth? Dr. Muda Yusuf, what are those long-term, short-term policies that can really unlock growth based on what we've seen from the report, the GDP?
Well, the policies we should be looking at, generally, you can classify them into the macroeconomic policies. We have the sector, the structural issues. We have regulatory issues. Those are the things, but I think the most profound are the macroeconomic policies and the security situation in the country. The macroeconomic policies have been very, the macroeconomic condition has been very devastating, especially from the point of view of foreign exchange, both the depreciation and the problem of liquidity in the foreign exchange market. And I'm happy that even the president acknowledged that inflows have been dropping, FDIs have not been coming in, but that is more of a domestic problem than an international problem. This is a question of the way we have been managing our forex regime. The foreign exchange regime is clearly not investment friendly. It's not the kind of regime that will encourage any investor to bring in money into this economy. And of course, even domestic investors are also suffering a great deal from the foreign exchange environment. How do you get investors to come into an economy where the existing investors in that economy that are foreign cannot take their money out? They can't repatriate profit, they can't take their dividend out. How do you want other people to come in? Look at the kind of embarrassment we suffered with the airlines. In the whole of Africa, I'm not sure there is any country that is in that kind of situation, even in spite of all the general global economic conditions, where airlines cannot repatriate the proceeds of their ticket sales. So the foreign exchange policy, I think, is the biggest of the policy problems that we have. And of course, we need to look at our trade policy as well. The trade policy is too focused on revenue generation. The customs, everybody just chasing revenue targets. Even when such measures are hurting investment, they are hurting the capacity to create jobs. They are hurting investment growth. But the fiscal authorities just keep focusing on revenue. I'm not saying that we should not generate revenue, but we should be very strategic in the way we do it, particularly from the trade policy perspective. There are some critical inputs that you need to support growth, to support manufacturing, to support the real sector. We need to liberalize the import of those inputs so that I can build domestic capacity to grow. So we need to review trade policies, of course, issues around infrastructure, energy policy, oil and gas policy. So there are a whole lot of both macro and sector-specific policies that we need to review so that we can properly reposition this economy.
Yeah, I think very clear what you've said is that we need to review our trade policy. I know the Minister of Industry, Trade and Investment has talked about revising the trade policy, but we're waiting. So we have to keep pushing to the Honourable Minister. When are we going to have that revised trade policy? Like you've anchored on the fact that it shouldn't be focused on just revenue generation, but also a progressive policy that helps all key sectors to grow and of course support the economy. So we'll be watching to see if before the administration elapses, we'll have that revised trade policy. Because if that doesn't happen, then definitely we have to wait for the next government and hope that they come on board with such. But very nice insight based on what we need to do. Dr. Wood, I know you're always very big on monetary policy, so I know that the foreign exchange conversation, you would bring it on board again. And of course, the experience of the Emirates Airlines shows that we need again to have a very, very focused and pro-business foreign exchange policy that encourages investment into the economy. But Doctor, let's look at the Medium Term Expenditure Framework for 2023 to 2025, which will anchor the fiscal policy, expenditure, and even the budget. We see two areas, investment and subsidy on premium motor spirit. You've talked about investment already, so I think we can now understand what needs to be done. But let's look at the fact that the investment approach is expected to be dragged down by interest rate hikes in advanced economies, as stated in the news from World Bank, foreign exchange management, which we've raised, and other domestic challenges, including insecurity. What do you think will be the direction of monetary policy between now and the end of the year? That is in one tranche. And then secondly, for subsidy, there are two scenarios. The business as usual scenario, meaning 6.72 trillion spent for full year 2023, while the reform scenario, which hinges on its removal in mid-year, means that 3.36 trillion naira will be provided for. But note that there should be a new government by next year. So what scenario do you see unfolding? Those two tranche questions.
Well, on monetary policy, I think for me, we have reached the limit of what monetary policy can deliver as far as inflation is concerned. As you know, the principal objective of the monetary authorities is price stability. But if you look at all the policy instruments that have been deployed, they have been practically exhausted. We have a cash reserve requirement of 27.5%. It's one of the highest that you find around the world. And in practical terms, if you talk to operatives or those who are in the banking sector, some CRR is, effective CRR is up to 50%, sometimes even more than that. So the banking system is already highly squeezed as far as this monetary policy instrument is concerned. You have the liquidity ratio at 30%. Sometimes you have these direct debits arbitrarily by the CBN, depending on the liquidity of each bank. Then, of course, you have the fact that the MPR has been increasing. I mean, the last two MPC meetings, there's a significant jump in the monetary policy rate. And what result have we seen as far as inflation is concerned?
Inflation is heading to almost...
Inflation has been increasing. So we don't just hike rates for the sake of hiking rates, or hike rates because other people are hiking rates. We have to situate it within our own circumstances. We need to identify the key drivers of inflation and determine whether increasing rates can actually solve the problem. Because what I have seen is that this increases in rates is just almost penalizing those who are already indebted to the banks. That is the only impact it has been having. Maximum lending rate now is moving close to 30%. Prime lending rate is getting close to almost 25%. So how do you want these industries and investors to cope? In addition to the existing headwinds, energy costs, foreign exchange problem at the port and all of these things, how do you want them to contribute to wealth creation? So I think, although the temptation is for the CBN at the next meeting to continue to hike rate, but my view is that hiking of rates will not bring any value. If anything, it will drag down the prospects of economic recovery. It will make life even more difficult for investors in the economy. And I don't think that is the route to go. I mean, the CBN itself also has been contributing to the problem of inflation with the fiscal authorities, with the financing of deficits. I mean, ways and means is getting close to 20 trillion. That has a significant impact on inflation. Nobody is talking about that. We are talking about MPR. MPR will put a lot more pressure on investors in the economy. So that is my view. Even globally, you also said in your report that even the World Bank has been, warning against this persistent, consistent increases in interest rate hikes.
Even though the Fed and the Bank of England, others have raised rates, even South Africa Reserve Bank, they all raised their rates.
They raised their rates, but I don't know whether you listened to the interrogation between a senator and the chairman of Federal Reserve. When the senator was asking the chairman of Federal Reserve, that's Powell, that if you increase rates, will it bring down gas prices? He said no. He said, if you increase rate, will it bring down the cost of groceries? He said, no. He said, why are you now increasing the rate? What do you want to achieve? You are going to make life even more difficult for citizens of the United States. That was the exact statement that the senator said. I mean, when the chairman of U.S. Fed, appeared before the Senate committee.
Yeah. So that means, like you rightly said, there has to be a balance between fiscal and monetary. Just like in UK, I mean, just last week we had the biggest cut in tax, business tax for 50 years. So, I mean, whatever fiscal measures can be taken to combine with monetary policy actions, it's very critical. So I get your point. So, but we'll be monitoring the MPC meeting, which begins today, and we'll see what decision is taken, whether the MPC will raise the rate again, or maybe maintain just a dovish posture. But doctor, as we look, we're now heading into the last quarter of the year. What do you see as the outlook for the Nigerian economy? What are the things that will really shape the developments? At this point, our current government may be looking at more short-term measures, because in the less than 6 months, a new government will come on board next year. Well,
the outlook is not looking bright. First, from the policy angle, particularly the foreign exchange policy, don't say, I don't want you to feel that I'm overflogging this foreign exchange something, because it has a systemic effect on the entire economy. It's affecting all sectors. It's affecting capital flows.
So banks are even saying now, the Naira cards may not be, I mean,
it may yes. I mean, if you want to pay subscription of even $50 for some of the resources we get, we cannot use your card for it. I mean, the whole system is collapsing. So the government seems to be very rigid on this foreign exchange thing. If that remains for the rest of the year, then we will continue to grapple with all the foreign exchange induced problems. Those will continue to stay with us. Because up until this time, the government has not admitted that its foreign exchange policy is defective. Then on the fiscal fronts, I mean, the revenue situation is so bad. I mean, you talk about the MTF. Now, if you look at the MTF, the total budget on the MTF for 2023 is about 19.4 trillion. Now, you have 6.3 trillion or so for debt service. You have another 6 trillion for fuel subsidy. And the total revenue is just about 8 trillion. So you have an economy that is running almost 100% on debt. So they have to, and that is likely to continue between now and the rest of the year. You saw the report that was presented by the finance minister for the first 5 months, where the debt service was 1.94 trillion. The revenue was about 1.63. So the debt service was almost about 119% of revenue. And revenue performance across all the revenue heads have been dropping. There is no indication that all these things will change. So I think we are going to live with all these macroeconomic challenges, policy problems, I mean, between now and the rest of the year. So I'm not too optimistic, given the rigidities and the fact that the government has not admitted that there's a major policy problem. Because the easiest thing you can do to fix a problem is the policy problem. It doesn't take time for you to change your policy. It could take time to fix infrastructure. It could take time to do some other, but your policy is not difficult to fix. So if you have a government that doesn't believe that there's any problem with the foreign exchange environment, the policy, then we have a very big problem on our hands.
Dr. Muda Yusuf, thank you very, very much for this very interesting insight on the economy as we look at the fourth quarter 2022. Obviously, it's long overdue for us to revise our trade policy. Also, our foreign exchange policy needs to be rejigged, and the indicators are very clear. And like you rightly said, even if the central bank raises rates again, what impact will it have on the economy? So we just need to rethink our policies and make them progressive for inclusive economic growth. Thank you very much once again, Dr. Muda Yusuf, CEO of the Center for the Promotion of Private Enterprise, for this very interesting conversation.
Thank you very much, my friend.
Thank you. And that'll be all for this edition of the Economy and Politics Show. You can follow our social media platforms to get further updates on this conversation around the fourth quarter 2022, what's the policy options for monetary and fiscal authorities in Nigeria. Don't forget that ProShare, Nigeria's leading financial information hub, has released a report the anatomy of crude oil theft in Nigeria, understanding the graft, impact, and implications. It's a major talking point in the country. You will need to read the executive summary to get it, and also it's available on our website. So join our website displayed on the screen. My final note as we wrap up. An economist, Dr. Ayo Teriba, has been like a lone evangelist, talking about the need for us to financialize our assets. Government needs to assess its assets and look at ways of financializing them to gain liquidity. Now that the president has admitted that we are low in private investment inflows and even foreign direct investments, is it not time for the government to sit back and really work on its asset register and explore ways that it can financialize its assets and begin to gain more liquidity in times of global economic uncertainty? That's a food for thought, and I hope the fiscal policy authorities will begin to take these steps drastically and address it, just like the need to address crude oil theft. Thank you for being part of the show. Thank you for engaging us today. And also, if you have questions, suggestions, or comments around our show, send them to the email displayed on the screen. Until we come your way again, thank you for watching and have a nice day.